Let's jump right into this midday market recap for August 31st. Started out a little rocky. Tried to swing for the fences and ended up striking out. That's what happens when you more or less try to hit a home run instead of just getting on base. Pretty much strike out. And if you take a look at my screen, we'll jump right into some of these trades for the day. Let's jump into this first loss, which was BW. So BW was a trade, took first thing in the morning. Setup looked good from the beginning, but there was no follow through, and because I put 10,000 shares on, ended up losing $1,000. But that comes with the territory, man. If you don't have the stomach to take a loss, you can't have the stomach to take a win. That's just the way it works in this business. This business is not for the faint of heart. It's not for the weak in spirit. If you're not strong and courageous and brave in the face of adversity, you might as well just collect your paycheck every week from your job and not worry about trading. Because this is not for those who are afraid to risk money. Anytime you make an investment, you're taking a risk. You're either gonna win or you're gonna lose, but you gotta live with the results. So with that said, this first trade, we saw. Let me scale this out so you can actually look and see what I saw. So if you look right here, we had this big topping tail form, letting us know there was some selling pressure. Sellers pushed the market down, found a level of support. I decided to get in at the very next candle, which was actually right here. This candle. So we did have a high volume. A lot of traders started entering the market. Roughly 235 shares fired off. So I took a long position at 222, right above this high. Entered 10,000 shares. Stock pushed up to 229, and very next candle, we had a double top form up here. And what do we know about double tops? That's an area of resistance. So the very next candle was shot back down, ended up hitting my stop down here at 217, taking $1,000 loss. So that was the very first trade of the day. And what I learned from that trade was, my first trade, I should just scale in, meaning I should, instead of taking 10,000 shares from the beginning, should have just added about 2,500 or 5,000, and then saw what the actual stock was going to do thereafter. But I didn't do that. Loaded the boat with 10,000, trying to hit a home run. Ended up striking out, costing my team roughly $1,000. So next, I decided, well, I just need to get on base. Just get on base, hit some singles, become profitable. So the next trade I took was ES trade, ES futures. We had this bull flag forming. Let me move this over. So saw this right here, which is a bull flag setup. We had this low right here at 24.42. Market pushed higher, pretty much all the way up to 24.51. Which actually was an area of resistance. So it pushed through this area right here, resistance on high volume, 21,000 contracts fired off. We got a small pullback. So I look for the very next candle to make a new high on increase in volume. You can see volume going up. You get an increase in volume. I took a long position, roughly 5 contracts, and then just scaled out as a stock, or as this future went up. ES mini futures went up, scaled out, and exited the position around 57.50. So made a nice profit on that, a little over $500 on that trade. Got half my losses back. So the ES mini futures look like they are continuing to go higher. This was a major area of support right here on the daily charts. If you look on the daily charts, you'll see we have this descending trend line, and today we bust through that trend line, pushing the ES futures higher. So this market could continue to go higher this week, but as of right now, just be a little cautious. We need to get over this high 2460 before we start to feel real bullish. So that was the ES trade. Next trade was on Hertz, car company again. Hertz is actually presenting us with a lot of opportunities to make money. Took two trades on Hertz today. One was on the long side, and then the other one was on the short side. So let's look at a 1 minute chart. You can see the first trade on the long side. So open it up at 1894. We pushed higher. Then Hertz fell back down. Found some support off this. What's this? A 200 period moving average. And buyers quickly stepped in. I took a long position, roughly at $19. Got a small pullback. It did not hit our stop. We had our stop down here at this low, which is 1887, or roughly, 1887. So we held the position through this low. We finally got that U-shaped bottom that we like to talk about. You get a U-shaped bottom where sellers think they're going to push the market lower. Buyers step in. Sellers get trapped. Market end up pushing higher, and then just takes off from there. Ended up closing out this trade for a $700 gain, roughly around this 1940 area. So that was a very great trade. And with that, we saw opportunity to get short. Actually, only made $400 on that. I'm sorry. This next trade, we made another 3 for a total of 700. So we saw this doji candle forming, which is a neutral candle. Buyers and sellers are neutral. So if buyers were in the driver's seat right here, and then your very next candle is a neutral candle, that tells you sellers are actually stepping up. So sellers started to step up, took a short position, fell through this. I think this is actually a moving average on the daily chart. Let's take a look. Yeah. So if we see right here on the daily chart, we have a 200 period moving average right here at 1933. So at that 1933 level, we fell right through it and stayed short all the way down to 1860. Yeah, I think I got out around 1870. I'm sorry, 1870. Took profits off the table. $300 profit. Total of $700 on Hertz. So those two trades actually helped make up for that first loss. Next trade was IMGN. This was a runner. IMGN took off this morning and did not look back. It was a beautiful thing to see. Beautiful setup. Had our first entry candle right here. Said, okay, well, let's wait and see what the market does after what happened with that. My first trade on BW losing 1,000. I was like, well, I'll wait for a better entry. So we got a small pullback. Buyers start to step in. Volume increased on these two candles. Took a long position roughly at 787. I think around 5,000 shares. So 2,000 shares right here 830. Then another 3,000 shares at 863 for a $888 profit on IMGN. This was a beautiful trade. You get buyers to step in, have some selling pressure. The sellers can't push the market lower than the previous low, which is right here. So that lets you know higher low. When you get a higher low, such as this, let me use a chart. So you got one low right here, another low right here, another low right here. This is called one time framing, meaning the lows do not interact, or they do not overlap. This low does not overlap that low. This low does not overlap that low. So if the lows do not overlap, the market is continue to go higher. If it's continue to go higher, all you need to do is move your stop up. You have a stop right here. You enter a trade. It pushes up, pushes higher. You get a small pullback. Move your stop up to this initial pullback. It pushes higher. Move your stop up to this pullback. Once you cross back over this area of resistance, this now becomes support. You move your stop up here and continue to go higher. Continue to go higher. You can move your stop up again. So I ended up stopping out pretty much 861 when the market pushed higher, then rolled back over, hit my stop, and I was out. And that's how you trade. You keep it simple. My first trade went simple. That's why I lost $1,000. When you keep it simple and stick to a small plan, which is just get on base. You don't need to swing for the fence. You don't need to think you're going to hit a home run every single trade. No. If you make $100 here, $100 there, $100 there, that $100 actually starts to add up to 500, to 1,000, to 2,000, 3,000. Keep it simple by getting on base. Then once you get on base, all right, look for the next stock to get into. So the last trade I took today is KEM, which was a small winner, $100 winner. Got on base. So if you see, we had a bull flag set up. We got our flagpole right here. Then we get a small pullback. We're looking for the first candle to make a new high on high volume, which is actually this candle right here. So we enter a long position at 285. As you can see, volume starts to increase. When volume increases on a bull flag, you would get a pop. And that pop tells you, hey, it's time to pull the trigger. If you do not pull the trigger right then and don't get in, you will not be able to get in this trade. It's impossible. You end up chasing it. You'll end up getting in at 23.40, and then the very next candle, it's going to pull back over and roll back on, and you're going to be losing money. You're going to keep asking yourself, why do you keep losing money? It's because you're not following the rules of the setup. Bull flag setups mean, hey, this is a strong market. Buyers are going to step in every chance they get. You got this down candle, buyer stepped in. Down candle, buyer stepped in. Down candle, buyer stepped in. Then you're going to get that pop. And on that next pop, you should see volume increase. As volume goes up, the market or the stock will go up. You got to get in at that first candle to make a new high with increased volume. First candle to make a new high with increased volume when you're dealing with bull flags. Same thing if you're dealing with bear flags. Bear flag is just the same chart pattern in reverse, going downward. Let me see if I can find a bear flag for you. Let's take a look at Macy's. It's not that clean. Let me see. I think I could. JC Penney. All right. This can possibly be a bear flag. You get down. You got your flagpole right here. As you can see, it's decreasing. Buyers step in for a little bit, push the market high, push the stock higher. Very next candle forms. It hits a new low below the previous low. So this is the previous low of 904. This candle crosses below that low on increased volume. That tells you to get short. So if you get short around this 897 area, you could have stayed short down here. Moved your stop once you got this bounce. Stayed in a little bit longer. Started taking profits down here in the $6 range. So roughly a $2 drop all the way back from here. even $3 drop if you can get in at $9. So it's the same setup, just in reverse for bear flags. You have to be able to trade the market both ways. You have to be able to buy and sell. You can't just be a one-trick pony. Like I said, this market game is not for the weak at heart. It's not for the faint. It's for those that are not afraid to confront, challenge any and every day, look in the eye of adversity, have conviction in what you're doing, and trade your plan. If you can't do that, you got to just stay in your lane. Do not try to become a trader or investor. You have to take risks if you're going to play this market game. You have to know what supply and demand is if you want to play in this market game. Like I said, I messed up my first trade by swinging for the fences, lost $1,000, got back on my horse, decided, hey, I'm not going to swing for the fence. I'm just going to get on base. And when I get on base, I'm just going to keep getting on base until I get my money back. And that's what happened. So I'm going to leave you with this. Trade your plan, plan your trade. Those that don't have a plan in place will fail. I am the bearded trader, and let's get on base.